Hello, I'm Hagan Rogers with Watermark Advisors, and today we're in part 4 of our series on M&A and the economy, and we want to focus on acquirers today and what the implications of what may be stagflation for a while has on acquirers. So first, going back to July 13th, the Consumer Price Index was reported to be 9.1, which is extremely a high level considering that the average inflation from 1980 to 2022 has been just 3.25%. So stagflation, as we know, is a negative growing economy along with high inflation. So if that is the case, we're about to see what we've said in the previous videos is a shift from a seller's market that we've been in for over a decade to a buyer's market. We think we're in the midst of that now. So what does that mean for acquirers? It actually can be good news, and let us explain that. First, studies have shown there have been better returns for acquisitions when the acquirer transacts that business acquisition in a slowing economy or a negative economy. So let us first explain that. We've researched and found some really good data from a 2019 Boston Consulting Group report that looked at over 10,000 deals that were closed, M&A transactions, with public buyers across all industries with deal values greater than $250 million from 1980 to 2018, where they looked at how those acquisitions performed in weak economies and strong economies. So a strong economy would be when a deal closed when the GDP growth rate was in the top third of all growth rates. A weak economy deal would be when a buyer acquired a company when the GDP growth rate was in the bottom third. And the stats are really fascinating to look at. And we have here 3 days before the transaction closed, 3 days after, 1 year after, and 2 years after. And we have the light blue are weak economy deals and the dark blue are strong economy deals. And the outcome is really a significant variance in the positive for when a buyer acquires a company in a weak economy. In fact, we're looking at 1 year out, 670 basis point spread, 2 years out, 960 basis point spread. So really interesting data here and positive for considering making an acquisition in a recession or a weak economy. Second bit of good news for the acquirer is that there's a stronger relative total shareholder return for infrequent acquirers in recessions. Let us first define infrequent acquirers as BCG did in this study. So the same study again, looking at the same time period, and basically an infrequent acquirer is when a company acquires 3 or fewer acquisitions in that time period. And the data is also really positive for the infrequent acquirer, which has a harder time capturing ROI to acquire in a better outcomes acquiring in a recession. In fact, 2 years from the time of the transactions, the RTSR is about plus 1.4% for the infrequent acquirer at that time when they acquire in a weak economy or a recession. But in a strong economy, the RTSR is a negative 13.8%. So that's telling you that really favorable to consider as an infrequent acquirer to be thinking more seriously, intentional about making acquisitions at this time. Why is that the case? We think there are two main reasons. Obviously, there are a host of other reasons, but two predominant reasons are more frequent. One is that when we think about valuation, we think about the numerator and the denominator, and typically acquirers can buy a company at a lower valuation in a weaker economy, and that's because the numerator, if you think about valuation, the theoretical aspect of it, you have free cash flows, which often are projected lower in near term, kind of 1, 2, 3 years out when you're in a sluggish economy. And then the R, the denominator, is the cost of capital. And interest rates go up in recessions, and especially in periods of stagflation specifically. And so therefore interest rates go up, the cost of debt goes up, and also the cost of overall cost of capital will typically rise. So with those two scenarios, you have lower valuations or lower purchase prices for companies. So when that happens, you have an overall lower valuation. You have the ability to capture an ROI above a hurdle rate. So looking at the hurdle rates here, this concept here is what all acquirers think about when they're deciding to go, no go with an acquisition. A hurdle rate is that benchmark return that they must see that before they acquire the company, they must see that they can get at or above that hurdle rate before they give the green light to make that acquisition. And so there's a delta between that hurdle rate, which is constant, the cost of capital of doing the deal, okay, which cost of capital is going to go up in inflationary periods typically, and yet the valuation of the target goes down. So the ability to achieve an ROI goes up for theoretical or purchase price reasons because it's easier to get that ROI when you're paying less to buy the company. Secondly, and maybe more interesting, is the fact that a lot of failures in capturing significant ROI from acquisitions occur because of this concept of integration, cultural integration. We have at Watermark have talked countless times about how difficult it is for a buyer to integrate the people side of the target. There are often defections that take place, and it's easy for people to leave a scenario when there's a good economy and the job market's strong. Well, in poor economies, typically the job market is weaker, and so harder, more uncertainty in the economy, more likely that someone will stay put even if their company has been acquired. So in that scenario, both from a valuation and from maybe perhaps an easier ability to capture the cultural integration side of things, we're looking at a situation where an infrequent acquirer has a better chance of capturing significant ROI and better outcomes from the acquisition. So what does this all mean for you? Let's kind of bring this home here. Remember, there are three phases to making acquisitions: the preparation phase, the transaction phase, which has due diligence in white, core M&A in blue, and integration in green. And then you have the integration phase. Our advice as you're thinking about making acquisitions is go back to your playbook, your M&A playbook, if you have one, and think about what needs to be revised or rethought regarding assumptions for that playbook. And it really plays out with all of these red areas. I'm just going to touch on highlight a few thoughts here. Strategy. Are you still, if M&A is important to your strategy in light of stagflation or a recession, is it the right time still to make that? In heightened degree of turbulence in the economy and in business markets in these types of environments. However, as I've said, it's a better time, history shows, to be the acquirer. And so there's a lot of uncertainty you need to factor in. Inflation, the changing cost of capital, regulation, which may be increasing in your market. You've got to take all that to bear. If that proves to be, you still have a green light, then you need to think about your resources, both internal and external. And where the mistakes often get made with sourcing a transaction is basically under-resourcing your deal, especially in due diligence and in integration, or overestimating the competency of your internal team. So thinking about perhaps the mix of internal and external resources is very important early on. Then you want to think about commercial due diligence, about the markets you're thinking about acquiring in. And I'll put these two together, commercial due diligence and your acquisition guideline statement. The markets you're trying to buy in, you may have a few. Are you still prioritizing them in the right sequence? how is that target market or those target markets changing given a stagflation economy and more turbulence? You want to rethink that and reach those conclusions again. And then finally, the kind of the tactical building out your target list. Where I often see mistakes made here is buyers don't have enough targets and maybe haven't vetted those targets as thoroughly as they could. We have some great research databases now that can be leveraged to prioritize perhaps a top 20 list that where your total list may be 100 to 200 companies. That top 20, you want to think very carefully about how you make the approaches. And this is perhaps requires the most patience, but if done well, you can acquire early in a recession, and the history and data shows that you can even get to better outcomes when you make an acquisition early in a recession. So to kind of wrap up this segment and even this series, it's the market we think is about to shift from a seller's market that we've been in to a buyer's market. And for the acquirer, while many will go to the sidelines and kind of retreat, it really is a smart time to be thinking about acquisitions based on everything we've researched and conclude that you have a better chance of capturing ROI. And so we hope you will consider that. And do not hesitate to call us at Watermark. We know that every circumstance is unique, and we are happy to talk with you about your circumstance, whether it's being a seller or a buyer, and help you think about these decisions in light of these turbulent times. Thank you very much.